quite actually interesting to come to this event, and I'm very happy to say at least we are not getting our heads down in way of focusing on the macro and the micro challenges and crises which are out there, and we have the regulators even talking about the opportunities in the business at these transitional times, which frankly speaking is refreshing. I think all of us are very much enjoying as well the fact that in the end we are having the chance again to mingle amongst each other and look in each other's face and not at Zoom or Skype digital picture, which I think is very important. And I want to keep the spirit and looking at the opportunities. Fintech has a lot of opportunities. And I must say that, Christian has tried to compress the challenges, in 15 minutes of a presentation. But it was key to hear it from a practitioner. And, I'm in a luxury position to have practitioners here with me who all are working on the topic of Fintech and can share their thoughts and views. And I would say, with that, Rehan, you want to introduce yourself?
Absolutely. Sorry, just a sound check. Okay. Hi, good afternoon, everyone. I'm Rehan. I'm the Chief Product Officer of Marketnode, which is a joint venture between Singapore Exchange and Temasek. We're building what we call end-to-end infrastructure based on DLT, with fixed income as our anchor asset class.
Good afternoon, everyone. My name is Stephane Malrait. I work at ING Bank, and my role there is to look at market structure and innovation.
Odonnat from the Banque de France, where I'm Deputy Director General for Financial Stability and Operations. I deal mostly with the implementation of monetary policy.
Hi, my name is Michael Voisin. I'm a partner at Linklaters in the Capital Markets Department. And one of my areas of focus is financial market infrastructures and digital bond issues and fintech generally.
Perfect, thank you very much. I think what's quite interesting, right, over the course of today, I think technology and sustainability, you couldn't separate them. And I think in the words of what we learned today, it's called, twin transition. And in that regards, actually, let's make sure we focus on the fintech and technology side of things. I mean, I would say we had the benefit of a pandemic environment where finally, while technically everything was possible already probably 5 years, 10 years ago, we all were very hesitant to really use it. But then the pandemic came along and we started to use actually what we already had, and had this moment of relief that actually even so you're at home and away from your usual workplace, you're able to do anything and everything more or less. To the point that today we have a discussion about then the future of how it actually looks like. That being said, when it comes down to fintech as well, I think in the past 12 months we had a lot of conversation as well about central bank digital cash. A lot has happened. I think we come out of a period where over the last couple of years we had a lot of test cases in terms of digital bonds and use of DLT. Certainly got mixed up very often by the word of crypto and what it means. It's like in the sustainability space, you have greenwashing coming along. I think we like to separate that, but lots has happened in the last 12 months. And the Banque de France, I would say, it's been very busy last year, particularly in December. So there was a last minute rush in some way. But why don't you share your lessons learned and what do you think actually, what's going to happen forward looking?
Thank you. I mean, I think this panel is quite topical because we need to make a sense of all these efforts to embrace the technology from the private sector, from the public sector. I'm coming from central banks. As part of our business, we issue money, we issue cash. This central bank money takes two forms, banknotes and bank deposits on the books of the central banks. So the question is the following. In a way, you may think of bank deposits as a form of digital currency for the digital money for the central bank, issued by the central bank. So let's take apart for the time being, at least the banknotes part. There's a lot of talks about that. Let's focus on the bank deposits and this form of money and how it can help to address the need of banks, market players at large. Is there any reason to change the current setup? My answer would be probably for two reasons. The first one is about the move of tokenization of assets. I mean, don't need to expand much on the benefits of DLT in terms of simplifying processes on bond markets, making the access to data simpler, making reconciliations simpler, and basically making transactions much faster from T+2 to T+1 and maybe T, right? So the next question is, if you want, and I think it's the idea, if you want to reap the full benefits of this progress made on the issuance and the management of assets, maybe you should have the settlement assets under the same form as the asset itself. And actually, you have it in the DeFi. These are stable coins. But what are stable coins? Stable coins are a form of private settlement assets. So the concern is that if you think that DeFi can develop, you could have a situation where you have a world where assets are exchanged, are issued and exchanged, and settled in a private form of money. And I believe this is probably the wrong way to do it. In Europe, the trends we have been witnessing over the, let's say, the past 20 years is a trend where central bank money has become the anchor for settlement of assets. And that follows the recommendation, the principles set by international bodies such as CPMI and IOSCO.
Does that mean, you know, while we were testing about the asset side and tokenized and use DLT, you know, some people, some stakeholders in the market, before you implement, you were very realistic about the fact that one can't go without the others. That's what we are saying. So, you know, we need to have the asset side and the cash side more or less come at the same point in time. There is no real sense really to do, you know, go into the future with the asset side, but stay in the past with the cash side. Is that what you're saying?
Definitely. You need, I mean, again, if you want to go to reap the full benefits of this simplification, you need to do, to do both. But you need to do it in a secure way. So my argument is that stable coins are not secure enough. I mean, actually, if you want to get rid of the counterparty risk part, you need to have a central bank. So you need to have a form of tokenized central bank money. And that's why the CBDC experiments we conducted are about.
So that means actually now we are at this very exciting point. So it's finally by testing, you know, the DLT can do so many things, and we talked about the last 5-10 years about it. Finally, we have the final conversation about the cash leg. And once we have that together, then we really have a chance to implement a new infrastructure. Is that probably fair to say?
Yeah, I mean, I'm talking about the experiments. There are challenges. We may discuss it, but I think the promise is there because we've run so far 9 experiments with a huge variety of participants, private participants. On the issuer side, DMOs, CSDs as well involved, other central banks, international issuers. And the conclusion of these experiments is that first it works. You can do it, and you can do it in a simplified way, and you can do it faster. So
that sounds like a win-win. Yet, you know, you said as well there are some risks about it, and Christian was saying as well, you know, there are bumps on the road, and he said, you know, it's the question how you do it and how long will it take. So, Stephane, I think it's fair to say, you know, often we talked a lot and there wasn't enough action, and you know, for some people it didn't go fast enough. Are you now excited about the fact that, you know, we tested all the digitalization and tokenization, and you know, central bank digital cash seems to be around the corner? Are you excited, and do you think finally you have better conversation and different conversations?
Yeah, I think so. I think finally the stars start to align a bit, right? Like 10 years ago, it was dream state, and we say, well, DLT is going to change capital market forever, and it's going to be fantastic. And then, you know, a few years later, people say, well, what did you do in the last 5 years? It's still not there. But it was a necessary step, because first we had to test the technology to make sure it was secure, it was scalable, it could work in a traditional finance type of world. Then we had to do the proof of concept into the issuance of tokenization of existing assets, into the trading of existing assets in a DLT format, and then into the settlement on the cash side of exchanging money. And now we can prove that all those components are there. We have to plug them together. So the stars are aligned, but it's still kind of a dented, bumpy road. So I don't think it's going to happen tomorrow. People have to be realistic that this is going to take time, and it's going to be an evolution, right? For me, it's equivalent to when the debit card arrived to replace the checkbook. Right, you still have people, you know, my parents still use checkbooks, but I didn't use a check in like 10 years. So we'll have the old rail, and we are building the new rail, and this new rail is going to take some time to adapt. But I'm quite excited because, yes, now we talk more about it, but we also experiment about it, and it's not just the private sector, it's working with the public sector, and we also have the regulation coming to adapt to it as well. So with those three components, I think we are going to have a great future.
That's positive, and we want to keep it positive, an opportunity. So, you know, in terms of the time component, we're going to dive into this a little bit, what it will require. But, you know, Rehan, Asia, yeah, we're hearing what we do here in Europe. We had the Banque de France here just saying, you know, what are you guys doing in Asia, and what's your feel about, you know, where Asia is in this transitional topic?
The journey, yeah. So a bit of history on Asia. If you were in Asia in 2020 working on digital bond projects, it was actually a very good year for you. It was a year where we saw a combination of POCs from Thailand, from Philippines, Indonesia, and Singapore. And then there were a few one-off issuances as well, followed by a bit of navel gazing as to how do you really turn this into a commercial business? How do you really take this infrastructure, a new way to do these things, and really try to convince the issuer that this is a meaningful step forward? So that's been the Asia journey. Some of us have come out of that journey. If I take Marketnode as an example, we commercialized this DLT infrastructure business in 2021. And very proud to announce that 2 weeks ago, we actually did our first CP on DLT. It was a US 100 million issuance. Obviously, as we'll talk a bit more during this panel, you can't go the full way with on-chain settlement because of the lack of a CBDC. But we actually felt that we needed a lot of time to study exactly what problems the technology solves, and frankly, is it meaningful enough for an issuer to be able to commercialize?
Michael, I mean, we talked already a little bit about the bumps on the road, and may take a little bit longer. You know, when we think about you know, fintech and implementing these new infrastructure, where do you see the risks?
Well, the risk is, I think, there are things that are untested, but and people need to think through a lot of the issues that are arising. But there's a big difference, I think, between, for example, so the crypto or the DeFi world, where there's a trend of, oh, let's go off and do it. And if you break something, it doesn't matter. But actually, in the sort of traditional markets, it does matter. And you've got to build these products on really, really sound foundations. And that's both technological, that's resilience, it's operational, it's legal. And it's got to be regulatory sound as well. And so there's a lot of work in making sure that all of those things are understood, addressed, and resolved. But we're not at the end point. I think we're beginning a journey. And if you think it's like building a railway network, if you want to build a railway network, you can start with one station. Well, that's not much good. Your second station, all you can do is go between the two. Everyone else is watching, so I don't want to go there, I want to go over there, but there's no rail line there. And the evolution is about building out this network and people developing the product as they go along. take another example. I got another example. Is the EIB. They're given a great example of their bond, and they're saying, well, we didn't want to build a Ferrari. We wanted to build a car because actually, when people started building cars more than 100 years ago, no one knew how to drive them. And the thing about moving this forward is that people get to understand, to experiment with the product and learn what to do with it. We're not going to get to the end point straight away. So it's a really interesting journey.
Yeah, and Ivan, these test cases, right? You said it's working, right? Yet there are risks. What do you feel? What's next? What does it require actually to scale it? Yeah, to the point of Rehan making. We tested a lot, yeah. But the biggest question everyone has, yeah, is kind of, okay, is it a scalable model? And later on we're going to talk about, how to scale it. Do you think, what's required to make it scalable?
There are different aspects in that. There is a technological aspect. I think technology is going very fast. Michael is saying that we are just at the beginning of a journey, and we don't know the end point for one reason. Technology is going very fast. The number of transactions you can settle with some of the blockchains that are today live is much bigger. They're like 1,000 more than times Bitcoin, for instance. So one difficulties with the blockchains initially is that when you compare their performance to the RTGS systems we use today for payments, interbank payments, was ridiculous. I mean, based on that, you would say, what do you need Bitcoin or whatever to make interbank payments? It's going back 50 years ago, right? Now you have some of the blockchains that are going as fast as the instant payments we developed within the Euro system, the TIP systems. So being able to settle 2,000 transactions per second, So that's one thing. Another aspect is to align expectations. You need to talk to a lot of people. Actually, I think the aim is not to disrupt anything. I mean, disruption sounds a nice word for a central banker. We don't like it so much. I mean, we like things that are stable. That doesn't mean that we do not want to move. We innovate, but we want to innovate in a way that keeps the stability there, because the financial stability is also in our responsibility. So that requires talking to market participants, talking to other authorities. And so there is indeed now a very deep conversation at the international level. You see different views depending on the jurisdictions and the way the banking system is developed. So there are different approaches, and I believe that the technology allows having different setups.
Yeah, I think we recently had a bit of a hiccups, right, in terms of stablecoin market. Yeah, we had the IMF Global Financial Stability Report coming out as well, saying this market has grown too fast and there are suddenly risks. So people started to talk much more about the risks. Yeah, does that mean we probably need, like in many transitional situations, you need a hybrid? Stephane, what do you think? Do we need a hybrid like we had, the first hybrids came out before we have EV cars, and Tesla, and in some way, sustainability market has a conventional market and green bond market. Do we need a hybrid in this space as well?
You need it to some degree and at some point, but if I use the example of the car, I move from, a petrol car directly to a pure electric car. But because I was not in the first mover advantage, right? So the first movers, they move to the hybrid and then they will move to the electric car. The people who are, fast follower will just think. And I think we are in the same situation now, that it's very hard for a fintech company to offer a product today where you can do the issuance, the trading, the settlement, the cash exchange in full life cycle and make it scalable. Right, but it's easier for a fintech company to say we are going to focus on the issuance model, or we are going to focus on trading, or we are going to focus on the post-trade lifecycle management. But then when you put them together, so it's not too much an hybrid model, but you can see the world where it's a puzzle and you put them together, and then you will have that rail where it's going to work front to back.
So a lot of people are standing on the sideline waiting for the first mover disadvantage to go away, yeah, and hopefully jump on a train that really works.
Yes, I think it's you see both, huh? and I really welcome a lot in the French side. You see a strong alignment between the French bank, the central banks, the regulator to try to do this experiment front to back. And so they are in the first mover advantage zone because they can really talk the same language and pilot and see how it's going to work. And then you have the other country in Europe who are watching that to say, well, we want to be next, but let them do the hard stuff and we are going to jump on the train as well. And for some people, it's better to be first. Yeah. For others, it probably you want to be a fast follower. But what I think is you probably lose if you wait too long, right? Because it's going just to build your internal knowledge, skill set in your organization will take time, right? So you have to develop that internally.
Rehan, in our prep conversations, you were talking actually about the advantage to be, a follower. Yeah, and you considered Asia in that regard somewhat to be a little bit of a follower. Have you taken the advantage of it, and now now you show us the way, or what do you think?
Let's talk about what's kept Asia quite occupied. And when you look at some of the current market challenges in Asia right now, earlier in one of the panels, we're speaking about the ICMA Asia Offshore Bond Report. So Asia issuance in hard currency now is 620 billion plus. This is a 6x increase over the last 15 years, I believe, right? And one interesting stat about Asia is that there's more than 230 arrangers or securities houses actually doing these deals. There was an announcement a few weeks ago about a single deal in Asia that had 42 arrangers on there, right? So when you think about the mental calories that are being burned in Asia on broadly the digital effort, it's really around solving a lot of the pre-issuance challenges, right? And also, ICMA is obviously very active in the consult with HKSFC. Obviously, as that consult goes ahead, a lot of time will be spent updating the systems, the book building systems, the syndication systems. So I would say that that's where a lot of within the banks, within the arrangers, that's where a lot of the time is being spent today. Now, that's actually quite good news for Asia because we have obviously been watching the EU DLT pilot regime very closely. As I mentioned earlier, we've focused more on the pre-issuance side, trying to see where technologies such as smart contracts and DLT help in security creation, but not settlement yet. So it's not just that we've been sitting back and taking in what is happening in Europe. As you'll recall, over the last 2 to 3 years, there have been many new primary platforms, the upstream platforms coming out in Europe. I would actually argue they have many good lessons to be learned, right? Not just for Asia, but globally.
In some of the transitional topics, we start with a principle-based market. Sustainability is a perfect example in that regards, right? In some way, probably the crypto space, is principle-based as well, until it becomes too big. And returning a little bit to, what's the role and where are the risks? What's the role of the regulator and what's the role of law or legal considerations? Michael.
So there are also to unpack your question a bit there. In terms of trying to work out how one structures the products, one has to. I think there are two things. There's one, legally, can you do it? And what is it? How do you characterize it? And that's a very distinct question from what you create. How is it characterized for regulatory purposes? Does it need a license? What's the impact of that? And where the gray areas are is often in the regulatory perimeter. And so then it's about working with the market participants and the regulators to say, this is how things structured, this is how it works. There's a bit of ambiguity here, but actually this falls within this parameter. The existing regulatory regime supports this approach. And if a sympathetic regulator who understands that effectively the risks have been addressed, well, so actually, yes, there's a big question as to whether people need to conduct wholesale regulatory change and legal change to enable this technology. And I think there's a strong argument to say, actually, a lot of this technology is deployable within currently existing legal regimes and regulatory perimeters. So it doesn't require a massive shake-up around the world to move things. There are some challenges, and policymakers are aware of these. And that's why we're seeing pilot regimes and the like that are being deployed to allow people to experiment with some of the more edgy bits. Then going back to what you were saying earlier, I think a lot of the stuff was about hybrids. A lot of stuff we're seeing at the moment are a form of hybrid. So we're taking existing structures and we're tweaking them a bit with the technology to supercharge them a bit. But many of the large transactions we've seen in the market actually haven't been fully digital or have had many features of the traditional markets. And so what the experimentation is doing is pushing the envelope here or there, developing it. It's the point I was saying earlier, we're not creating a Ferrari to start with. We're building this car that people are learning to drive as we go along.
In one of the panels early on, people were talking about, same risk, same regulation, and they twisted it a little bit, right? By saying actually, it doesn't need to be same risk for same regulation as long it's the same protection and it's the same integrity. Do you agree to that, Michael?
Sorry. Absolutely. When you see a lot of regulation that's aimed at, and you see this particularly actually on the crypto and DeFi side, perhaps more, where people are trying to use existing regulatory techniques to manage perhaps new risks or new. Actually, I think one needs to take a step back and look to say, what are the issues, what are the risks that these things present, and then what is the appropriate way to revamp the regulation and think about new regulatory tools. Ultimately, the issue is the same. It's investor protection. It's the protection of the integrity of the markets. It's preventing abusive behaviors that cause people to lose trust in the markets. So the principles are there. The techniques one may need to achieve those outcomes, the integrity of the markets and the stability of the markets may be very, very different. And so I think we definitely encourage policymakers to think out of the box and new tools to achieve the same sort of protections we all expect.
Yeah, maybe I can add on that. What is strange for me is the first time that you have the market participants who try to go into this innovative space while going to their regulator to say, please regulate it. Please. Normally, we prefer less regulation, right? We say, can you help us to simplify the existing? But here, it's a very strange use case because to make it work, we need to tweak some existing regulation. And the good news is now we are listened to, right? Because as you say, they see that the crypto world will not die. So the traditional finance need to wake up and go to this new type of technology.
Got it. Ivan, your head went a little bit like this.
It's when Stephane was using the name twisting the regulation. I think it's not exactly that. I mean, indeed, regulation is an enabler.
Yeah.
But what we aim at is making sure that the transactions are secure, in a secure way. And the threats are from different types. You have money laundering. You don't want that. You have cyber risk. You don't want that. You have market abuses. You don't want that. And potentially from the central bank stability, you may have financial stability issues. So these are different avenues you need to tackle. So it's not twisting the regulation. It's, from my point of view, enhancing the regulation to make possible the innovation.
Ivan, do you think there is a risk not adopting? You're a market participant in capital market, yeah, and you would say, you know what, it's all nonsense. I'm not going to do this. It's not going to happen. Do you think there is actually a risk of not adopting to this technology and these developments?
I think Michael says something very important earlier. I like your image, your metaphor about the journey. We're at the beginning of the journey. And, if you look at the history of innovations, the most powerful innovations, they started in a way, they ended in a very, very different way. So it might also be the case here. So the honest answer to your question is that I don't know. but I agree with the approach mentioned by Stephane. The innovation is that we should embrace it, we should test it, experiment it. And by doing so, we help improving and making the markets, the financial system being more comfortable with it. And in the end, you may get something different, but for the best, I would say. That's what we aim at.
So we said earlier.
I have an anecdote on this one, because if you had the question 5 years ago, probably people would say, yes, it could disappear and we can stay with the existing one. And the anecdote I have, I was in a central bank office the day Libra was announced. And central bank used to tell us, listen, don't look at that, it's going to disappear. It's not your business, it's not our business. The day Libra was announced, this changed. And the BIS report show, right, 80% of the central banks now are looking at central bank digital currencies, right? So I don't think it's going to disappear. That will be my view.
No, completely agree. What do you think, will drive the implementation? Because, we proved the case, it works, yeah. We are happy about the fact that we have assets and cash now coming together. That's what we were waiting for. There's still risks. We need to make sure that the unintended consequences are somewhat understood. Yeah, but I think, the lessons learned out of the crypto world, the stablecoin side and so on, I think we are not a first mover in that case. There has been certain things already happening. So I think we can take a lot on board to be cautious and conscious of all these challenges in a way. But what do you think will be the trigger and drive more or less than the implementation of this? Well,
sure.
Rehan.
I'll give a soft answer and then maybe a hard answer.
Okay.
Right. So if I go back to your example of the EVs,
yep.
right, and what made people switch over from the hybrid Priuses in the late 90s to the Teslas, right? At a fundamental level, when you look at the experience of driving an EV, Tesla just did it so much better than anyone else. It wasn't about driving an EV. It was just about driving a better car overall. Now, as Stephane, you're mentioning that there's many different blocks to actually put together. And really, I found myself wondering who will get the connective tissue between the blocks right, so that from start to the end, from the moment the issuer mandates an arranger, to see all the way the distribution to the investor, it's not a bunch of hiccups coming in, right? So I think today where we are in the digital bond market, look, I've just been in Europe a day after 2.5 years. It feels like, at least in Asia, we're still at the Prius model. Right? The first rollouts of the Prius model have come through, the reviews are good, and people are wondering, when can I buy the Prius within a mass scale? What do I think beyond that is actually needed? A lot of this panel has spoken about regulation, a lot of this panel has spoken about market infrastructure, but actually the one thing that might be missing is, what is the right commercial incentivization model? And I don't know that yet, because if you look at the adoption of EVs in the US, there's been a lot of rebates at the state and the federal level to actually encourage adoption. So much so by the time that one manufacturer came to dominate them all. So I also think that we need to consider for the fintech that actually gets it right. What's the right model? Is it an industry-owned utility? Is it a standalone? Is it a consortium of banks that get together? So that's my hard answer, but my soft answer, I think, overrules them all, which is, how do you give an issuer really a turnkey solution to fundraise with all the advantages that Ivan was talking about, but cutting out the paperwork, the creation of the security, the messaging with the paying agents, with the CSDs, there's so much to improve over there.
I think it's about people as well. It's about the culture, right? It's still a very early stage area where people have doubts to say, so what? When I issue that on my DLT, why is it better, right? You have the green aspect, right? If it's on public blockchain, it's, are you going to have like thousands of servers trying to validate that transaction? How is it better from a green point of view? So you have to bring everyone together to understand what are the benefits and what are the fear versus the reality. And these take times. So that I don't think that way it will be an evolution process, because the culture is sync, and we don't like change. I think naturally as human, we have a system who kind of work. It's not perfect, but it's kind of work. So why should we change? So we have to bring the people along.
I think it's important the point you make about, people need to understand.
Yeah.
I think what in a transitional topic or changing the infrastructure means someone needs to understand the back to front process. Now, I'm not quite sure how many people do actually really understand the back to front process, right? In your projects, I'm pretty sure the room was full of people where everyone understood 5% of the problem or of the journey, yeah, and you needed to bring them all together so it becomes a full picture. Do you think actually that senior managers really understand the complexity and therefore the task at force?
Yeah. Well, I mean, it's like every topic. You need to find the adequate way to communicate to your audience. So when you talk to the top management, you make sure that they can relate the issues you discuss with their policy goals, their strategic goals. So it's more a matter of how you present things and making sure that everybody is able to understand how a blockchain works. That's not the issue for me. The issue is more actually, in the end, about the use cases. So technology is there, but what for?
Yeah.
But in which way it helps? I mentioned earlier regarding the tokenized CBDC, one use case, which is okay, settle the assets, the tokenized assets with a tokenized cash, digital cash. Another use case, I think I believe this one is very important, is cross-border payments. We don't talk about this, but cross-border payments is an area where you still have a lot of inefficiencies. It's costly, it takes time. In our experiments, what we managed to deliver, together with actually central banks throughout the world, including Monetary Authority of Singapore, is that, well, you can make cross-border payments like this. It's just a matter of seconds, whereas today it could take a few days. Yeah. So that's the power of the technology. It doesn't mean that in the real world we will be able to replicate this, but it shows you that you can do better than what you do, and I think that's what the technology is about.
There's interesting good use cases which people are deploying already. Rely heavily on intraday liquidity management and atomic settlement of different assets. So in the secondary trading market, there's a lot of really, really good examples of actually, or collateral management systems, linking up to large deployments of collateral quickly for settling trades. And so these are really powerful worked examples of how to take, and in many cases at the moment, that involves effectively immobilizing an asset and then using a digital representation of it on a blockchain. Whereas if you move to a digital asset, then you don't need to immobilize it. You can just deploy the digital asset. And that's so critically why you need the digital cash, so you can create that DVP. And you're right, the other thing at CBDC is I think everyone's terrified is that every jurisdiction goes out and creates its own CBDC and they're not interoperable. So interoperability is the key thing as well. So, and this is why I think all of the responsible jurisdictions that are doing CBDCs want to make sure they're interoperable. Because otherwise, it's a disaster. Because no one's going to thank anyone for that.
What hinders actually interoperability? Is it the lack of standard? Is that what's key, Stephane?
Yes. In my role, I look at the crypto side and the DLT side as well. But it's true, the lack of standard is a big thing. The lack also on interoperability between the different blockchain networks still not resolved. It's progressing, it's making progress, but still not there. And the difference of understanding as well of what can be done, and some are going faster than others. So it's going to be hard because, if one region or a country start to implement something, it's going to be hard for them to change when a new standard will happen in another region.
And then certainly it would be a step backward, right? If you have suddenly fragmented markets, right? When on the other side we try to have a CMU and make things come together, I think in that regards. I mean, the ICMA does a lot of work around standards in that regards. It's the most single, asked to the ICMA in terms of, let's make sure that we are working on common standards just to make sure we also are speaking the same language. And in that regards, I think a lot of our time certainly goes into this.
One thing that's I'm just mentioning quickly is people don't really think about it, but it's possible to have a single technological deployment that has different legal characterizations in different jurisdictions, but that you structure it in a compliant way in each jurisdiction so that the same technology can operate seamlessly across the jurisdictions. It's quite tricky, but there are examples where it's been done. And I'm not suggesting we want to do that in the debt equity capital markets, because that wouldn't be a good idea. But in some sub-product classes, that's been done as well.
So with other words, the rails can be the same, i.e. the infrastructure can be the same.
Technology, yes.
Exactly, but it doesn't hinder, therefore, that the regulatory environment that one is acting, that becomes, different in one country to another.
Yes.
So we are at least using the same technology infrastructure in that regards, and that requires standards, absolutely.
Yes.
Yeah. We talked about the fact that you need to change culture and you need to actually have people who understand what you're talking about and try to achieve. If I would ask you guys actually each the question of looking ahead, what's your advice to firms to make sure to successfully navigate actually through this change and the adoption of it? Because I think somewhat the mission and the vision is very much understood, but the problems are starting when we go to implementation. So Michael, maybe I start with you.
So my message is you may not be an innovator, but don't be a bystander, because this change is going to happen. And when your chief executive walks into your office and say, "I want to do one of these tomorrow," you're going to say, "Or perhaps in a year's time." And so actually getting involved, understanding, dry running, trialing all of the issues to see what your organization needs to do to deliver the product, and having a good sense of all of that now and just getting started, not necessarily leading the way. And if you worry about the cost, collaborate with others, share some of the R&D, and work collaboratively. There's a lot of benefits to that. And so, but just don't pretend it's not going to happen and sit on the side, because you will find it too late.
Perfect. Ivan, if I ask you, what's your advice?
Actually, two things, I believe. First one is that innovation is not necessarily doing something new, completely new. It's many times, revisiting something you've done before, it didn't work, and we could work under different conditions. So people, basically, the idea is that we need to build on what you've done already. I think that's very important, and you need to do it in an open way, in a flexible way, because as we said, you don't know the end game for sure. The second aspect is that, well, it's an advice also for regulators, at the same a commitment as a regulator, which is that regulations should be there to build trust, ensure safety, and the regulations should be defined in a way that provide the adequate incentives.
Perfect. Stephane.
Yeah, quickly, I have three things, but a big line with Michael is one, you have to start. And to start, I think the biggest risk that people have is you don't want to fail, but in innovation, you have to learn how to fail, right? When a baby learns to walk, he's failing a lot, but at some point he knows that well. So you have to start. The second, you have to be curious, and that's why we have the chance to have so many fintech companies who are exploring on that subject. Learn from them, try to meet them, have a demo of what they are doing, try to understand why they are doing it that way, etc. And the third one is don't do it alone. I think the key success of this new set of technology will be when the industry come together, because if you are on your own blockchain, issuing your own instrument, nobody is going to buy it. So you have to be part of a bigger group to be able to make it happen. That would be my three.
Thank you for that. Rehan.
Okay, so I have two pieces of advice, and first off, fully aligned with what everyone is saying. The first is, we are all practitioners in this room, knee deep with current primary, secondary processes. And we often fall into the trap of thinking that we are the ones who is going to see the next wave of how this is going to be done. I'm probably showing my age here, but I'd consider myself digitally savvy versus digitally native. And actually what we found was that the best decision we made within the new team, was actually pairing up the right generations of people. Someone who had the experience, they may not have seen the entire value chain, but enough of the value chain, and to be able to empower some of the younger generation to be able to take over and really reimagine some of the tasks. And I know ICMA does some pretty good work here, trying to encourage the young leaders to present ideas for evolution of capital markets. The second, and I think this pertains to how large FIs do innovation. I think the org structure and the linkage with the mothership is always quite important, right? So I don't think this is the case from what I see in Europe, but in Asia, what you tend to find is you have a large regional bank, and then one day, as Michael said, the chief executive comes in and says, let's do a bond on a blockchain. And next thing you know, there's a whole team of innovation people that have been lifted from completely random disparate industries. They're being led by someone who's an innovation specialist, maybe comes from a B2C market, and they actually don't know how to connect with the mothership, right? So I think getting the org and innovation structure right and being able to build the team with a good combination of seasoned and not so seasoned is quite key for this.
I think a couple of key messages here for the audience and all of us. Yeah, don't be a bystander. That's for sure. It's coming. Ivan was saying it's actually working, and we're all excited by the fact that now is the moment where digital cash comes together with the digital token side of things, so you really can change a market infrastructure. It's not free of risks. Yeah, we talked about that. Very important. I think what is encouraging, what you're just saying, Rehan, is actually the fact that digital savvy seems to be enough. Yeah, but you definitely need to involve the people behind you, probably a younger generation, because in the end, we are building a market infrastructure for them, and therefore, I think it's very important to listen to them. One last question I have, because I left it on the last panel, 2029. What do you wish for? So Stephane, over to you.
Yes, so wholesale bank, central bank digital currencies, I think it's still a dream, and I hope by that time it will be a reality.
Okay, Ivan, coming from a central bank, what's your hope for 2029?
Well, I make a link with the previous panel on sustainability. I think, today everybody's about green finance. Central banks are fully involved in this work. A few years ago, the topic was not there. So we took risk, and as far as Banque de France, we were very vocal on that, and we are still. So on CBDC and beyond CBDC digitalization, I think we need to take risk and to go forward as well.
Perfect. I think my wish for 2029 is that we don't talk about fintech and CBDC and tokenized bonds necessarily as a vision and a mission. Hopefully we are there, and hopefully, or I believe at least, that it's going to be in a hybrid. With that, I say thank you very much for my panelists, and thanks everyone here in the audience.